This video is only for entertainment purposes, so please, if you're planning on investing, take your time, do your own research, and invest at your own risk. And if you are new to this channel, hit the subscribe button and the bell notification so you can watch more of my videos in the future. And if you have some time, check out my other videos as well. So ladies and gentlemen, I am going to show you a strategy, with specifically an option strategy that you can make money off of. So in this strategy, you will be willing to risk some money in order to make profit. And I showed you a strategy in my last video where you can turn $40 into $500. And this strategy that I'm going to show you today is very, very similar to the other strategy. So if you haven't checked out my other video, check it out and please come back to this video. In today's video, the strategy that I'm going to show you will be called the Iron Condor. And this Iron Condor is pretty much allows you to predict the price of a stock, and you're going to predict that the stock price will be staying at two range. And what we're going to do is we're going to look at AMD. AMD is currently trading at the price of $79.22. And if we take a look at AMD for the past 1 month, the highest it went to, it was $84. And the lowest it went to, it was $75. So AMD in the past 1 month always stayed in the range between $85 and $75. So what we're going to do is we're going to go ahead and go to trade AMD options. And like I said, we're going to go ahead and predict the price of AMD by the end of the week. So what I'm going to do is I'm going to buy a contract that is going to expire on April 16. And you can change this. You can predict and change the contract price to April 23rd or the 30th or the 7th of May, however you like it. Me personally, I like the options to be as close as I can, and you can change it to the next week. It's not a bad idea, but for the sake of this video, I'm going to keep it to April 16. So if we go down right here, the share price is $79.33. So by the end of April 16, I predict the price of AMD will be no higher than $81. So if we take a look at AMD right now, I'm going to go ahead and sell a call for that price because I believe it's not going to go up higher than $81. I'm going to sell a call for that price. And I'm going to buy a call one step higher than that, which will be $81.50. And I'm going to repeat the same thing with a put. I'm going to sell a put, and I believe the price of the put will, the price of AMD will be no less than $79. So the price of the put will be no less than $79. What I'm going to do is sell a put at the price of $79, and then I'm going to buy a put lower than $79, and which will be $78.50. So if we take a look right here, right now, it changed to Iron Condor. This is the name of this strategy, and what we're gonna do, it tells you the total credit is 33 cents per one share, and one contract equals to 100 shares. So our minimum credit will be $32 as of right now. So if I press one contract right here, it tells you my minimum credit will be $32. Let's review the order. If we review the order right here, it tells you your minimum credit will be $32. Your collateral will be $50. So what you are risking as of right now, you are risking $18, because what Robinhood does, it actually transfers your minimum credit into a collateral. So what happens is basically you are only risking $18. So if you have only $18 in your bank account right now, or $17 or $18 in your bank account, and you can implement this strategy because Robinhood transfers your minimum credit into a collateral, which is really, really good. So let's review this order once again. I think that the price of AMD will be no higher than $81 by the end of April 16. So I sold a call for that price. Then I bought a call higher than the price I sold for. And I think AMD will be no less than $79 by the end of this contract, which is April 16. So I sold a put for the price of $79, and I bought a put for a price lower than $79. And now you can actually visualize this strategy. And my best option for me personally is what I do before the expiration date. Before the end of April 16, I would close the contract, because you do not want to risk the chances of being assigned to a share by AMD. And me personally, I always close my contract before the expiration date or on the expiration dates. So if you're making money on April 15 and you made like, $30 off of this option, or you made like $20 off this option, your best bet is to close it. But let's visualize this. If we go to option profit calculator, we can actually do the same strategy that we did. We can copy our order summary right here, and the calculator will allow us to visualize how the strategy will be played out. So right here, I put the simple as AMD, and it gave me the price. I'm going to go ahead and change it to the most recent price. And if we take a look right here, we can see right here is the long put, and the long put would be the pretty much the put that I bought, and the put that I bought would be $78.50, and you can see it right here. It's April 16. So I'm gonna repeat the strategy one more time. Remember, you can change the expiration date to whatever date you chose, and mine was April 16. So I'm gonna buy a put for the price that I chose, which was $78.50, and I'm gonna go for the ask price. And right here is the short put, and short put is the put that I sold for, and it's $79. I'm gonna go ahead and select a price, and it's gonna be right here. Puts are on the right side. And I'm going to go ahead to the $79, which is right here, and I'm going to click on the ask price. And right here is the short call. Short call is the call that I sold for, and I sold a call for $81. So if we go right here where short calls are, we're going to go ahead to the call section, because call sections are going to be on the left side, and I'm gonna go for the ask price. So $81 at the ask price is right here. And if I go to the long call, which is the call that I bought for $81.50, and I'm gonna select the option right here. Once again, go to the call sections, go for the ask price, and this is going to be the $81.50. If we calculate this, it will help you visualize how the strategy will be played out. So as long as the price stays between $81 or between $81 and $79, guess what? You made 163% profit, which turns to $31 or $30 depending on when you buy your contract. As long as it stays between that range, you made money. The only time you lose money, which is like 10%, if you go ahead, if the price goes below $79 or above $81, this is where you lose maximum loss. And this is it, ladies and gentlemen. This is an easy strategy. All you have to do is pretty much study a stock for at least a week or two. Or another thing that you can do is pretty much you can analyze a chart and predict the price by the end of expiration date. If you guys enjoyed this video, please leave a like and subscribe to my channel, and let me know what you think of this video and what's your favorite stock by the end of the video, leave a comment below at the video.